Hi everyone. Today we shall see what is the difference between multi-year guarantee annuity and CDs. CDs normally you do with the banks, and multi-year guarantee annuity normally you do with different financial providers, different financial institutions. The majority of the financial institutions provide the CD option, sorry, multi-year guarantee option. So let's see what is multi-year guarantee annuity and how it differs with CDs. So multi-year guarantee annuities, which is called MYGA, short form is MYGA, and CDs both provide a guaranteed interest rate over a certain period of time. So that is the similarity. That is the only similarity, and there are a couple of two we shall see in next slide, but this is the main similarity between MYGA and CDs, that they both provide guaranteed interest rate. Bank will say that, hey, I will give you 2 3% 4%, whatever annual interest rate or whatever, right? So in the same way, multi-year guarantee annuity, what does it mean? That this is multi-year, more than 1 year, guaranteed interest rate for that many years annuity. Okay, so that is the MYGA, similar with CDs provided by banks. Now what benefits do MYGA have over the CDs? Let's see that one. So these are the main parameters we can compare between CDs and MYGA. One is premium protection from market decline. So CDs also are safe. You don't lose your principal. MYGA is also safe. You don't lose principal. So there is a market downturn protection in both cases, CDs and MYGA. Guaranteed interest rate, both provide the guaranteed interest rate that, hey, for this many number of years, CDs you will get this much of interest rate, and MYGA also, before you invest, before you sign your contract, there will be the rate confirmation that this is the rate you will get X number of years. Now third one is surrender charges or penalties. Now both CDs and MYGA have the surrender charges or the penalties if you surrender that before the maturity. Okay, so maturity may be number of years you are committing for either CDs or MYGA. Now fourth one is tax deferred growth. This is very important and everyone should understand this one. In CDs you get 1099 every year, whatever interest you on your CDs, right? While here MYGA, you don't need to file a tax on the interest earned every year. So when your MYGA matures, means number of years are ended, let's say 2 years, 5 years, 3 years, 7 years, whatever, at the end of that, until that you don't need to pay tax on the interest earned. So you earn money, you earn interest on that saved taxed money, right? Did you got it? So let's say if you have invested $10,000 and you are getting, let's say, 10%, just for an example, hypothetical example, 10%, so $1,000 is your interest for year one. Now you are not paying tax on that $1,000, so that $1,000 entire is again earning the 10% next year, right? So $100. So that's how you get tax deferred growth over the period of time. While in CDs you pay tax on that $1,000 if it is $1,000 interest you earn. So that is very important point. So you earn money on top of money. It's a compounding interest, right? Another one is surrender charge free partial withdrawal. Now in CDs there is no fundamental like partial withdrawal. while in MYGA you can withdraw 5 to 10%. Normally all the financial institutions give that leverage, that you can withdraw some amount partially without any penalty or surrender charge. So that is again very beautiful and important aspect of having MYGA. Terminal illness and nursing home riders. Now many of or few of the MYGAs will give this free riders or paid riders option. Whatever riders you want to opt for, that may be free or that may be paid. That you need to check when you sign your contract with MYGA, but that riders are available. In CDs, there is no such riders available. Pay to a beneficiary outside probate. So this is another good example that you don't need to have a court probate to distribute money if you are not there, and to distribute money to the beneficiary, right? Because beneficiaries are already there. In CDs that is not possible. An option to annuitize. Okay, so at the end of the tenure MYGA, you will have option that, hey, how you want to distribute that money. Do you want life income, means every year you get some amount, or you want lump sum withdrawal or partial withdrawal, whatever way you want money back, right? In CDs there is no such annuitization option. It's like CD is done, you get money back, right, with the interest whatever you want. So these are the main parameters where CDs differ from MYGA. So you see here MYGA, irrespective any company, these are more or less the similar benefits. So in MYGA you get all these benefits. Okay, so let's move on to the another benefits part in detail. So I had told you, right, tax deferral growth. So that is the number one benefit of MYGA. So you are avoiding annual taxes and 1099. You don't get 1099 and you are avoiding that annual taxes. You save that money, right, for future growth in annuities. No taxable event until you withdraw funds from your MYGA, multi-year guaranteed annuity. Another one is strong performance. So different companies, different financial institutions provide different yearly interest rate depending on their strategy, and depending on how much you are ready to invest upfront. It varies with different products, different financial institutions. But here if you see, this example is starting with 200k initial premium to MYGA with 4.95% per year interest rate, which is usually I have seen nowadays in 2023 many financial institutions are providing around 5 or 5.5 in percent interest rate. It may vary depending on when you are investing, with which providers you are investing, and those all. So interest rates subject to change as per providers products offering. But here if we see that 4.95 per year interest rate, your 200k at the end of 5 year will be 254k, right? And at the end of this tenure, whatever your as per your taxation slab, you may need to pay tax on the earnings. While in CDs, you need to pay tax every year on your earning, interest earned, whatever interest you earn. Okay, so that's how investing in MYGA helps you accumulate more money. Available riders, like I told, many MYGA from different providers have options of different riders. Few of riders are free of cost, while few may have additional cost associated with it. So you need to be careful reading the terms and condition, or you should discuss with your financial advisor that, hey, what all riders am I getting free, or am I getting any charges, or what. Normally examples of the riders are, let's say, nursing home benefit rider. If a person is in nursing home and if he need money, then he should have access to the money without any surrender charge or penalty, like that. terminal illness rider, that doctor prescribes that hey, this person will no longer live more than 12 months or 24 months, whatever, then you should have access to your money to enjoy your money while you are living without any penalty or surrender charge. So these are the beauty of having the riders, and riders are part of the MYGA. Fourth main benefit is beneficiary option. So pay beneficiaries outside probate, right? And beneficiaries can elect the death benefit or the spousal contribution option. So these are the main benefits and comparison between CDs and MYGA, multi-year guaranteed annuity. Hope this would have helped you understand. There are many more such videos where you can educate yourself on the annuities, IUL, and other protection plans as well. So please like, share, and subscribe this channel, Hariax Toria, youtube.com/Hariax. And you can contact now to Sona Life and Financials. They are state license agent in most states of United States of America and appointed by nationally recognized providers. All the major providers are with them, and different providers, different products of those providers have different benefits. So they work for the client, they don't work for the companies. So hope this would have helped you. Thank you, take care, bye.